So I was the COO at BTC China back then, or BTCC. It's a exchange and mining pool back in the day. It might actually take a few years, maybe 5 years, maybe 10, I don't know, but it will end, but it's taking longer. A non-digital fiat currency would not have this lifespan. So we know that we built something that has good product market fit, that meets their needs and gives them some benefits because liquid Tether transactions are cheaper and private actually. I think it's simply a supply and demand thing. Like in a perfect world, everyone would understand Bitcoin and everyone would just want Bitcoin, not today, but yesterday. Maybe not even yesterday, like 2, 3 years ago, right? That's the perfect world. But the world is not perfect, and people's understanding of the world, including Bitcoin, is not perfect. So there are people that want dollars. And I think that's a reasonable thing if they're, say, living in Venezuela or Argentina and their own currencies are hyperinflating. They're looking for something that is stable for them, not necessarily for us as Bitcoiners, but it's stable relative to their own local currency. And that's why they're looking for this dollar value. So I think until the world reaches a full understanding of Bitcoin, you'll still have people seeking out dollar value because it is better than what they have. And a lot of debts are also dollar denominated too. So suppliers go up the supply chain, people want dollars. So if you're doing business, you're a merchant or something, you have to pay and settle in dollars. And Bitcoin still is volatile, right? As it becomes the next reserve currency of the world, there will be ups and downs. So a lot of these people can't weather that volatility too. So even if they did understand Bitcoin, they cannot go all into Bitcoin. They might allocate something to Bitcoin, but they still want that dollar value because their debts are dollar denominated. So I think for us as a Jan 3 and the developer of Aqua, we've kind of accepted that and we understand that people want stablecoins. They want dollar value. So we put Tether front and center in the app alongside Bitcoin and layer 2 Bitcoin so that they can transact. They can send Tether out to other chains, but they're holding liquid Tether on the liquid sidechain. So it's better in a number of ways. But you can still interact and interface with that entire digital dollar economy in your country. But you see Bitcoin there, you see the Bitcoin price, and you might think, okay, maybe I'll swap some into Bitcoin. And that's kind of the hope we have, that we tap into the 400, 500 million Tether users and get more of them into Bitcoin. And I think we're getting there. Some of our biggest markets for Aqua are Argentina and Brazil. So we know that we built something that has good product market fit, that meets their needs and gives them some benefits because liquid Tether transactions are cheaper and private actually. So you can hold it in liquid Tether and swap out to Tron and Polygon Tether when you need to pay someone that wants that, and you maintain your privacy. But overall, I think we're not going to see stablecoins disappear. We can hate on stablecoins, but I think that hate is sort of a first world perspective because you probably have a bank account, right, Eric? You have a bank account?
Totally. Yes.
Yeah. So you're kind of speaking about this topic from a position of power and luxury where a lot of people just don't have a bank account, but they
Yeah.
want dollars. So what do you do in that case, right? So I think stablecoins definitely serve an important market. And there have been criticisms too of, you mentioned it earlier, like stablecoins are a CBDC, but it's not really a CBDC definitionally because it's not from the central bank, right? You still have that extra step. And I think the resistance towards the CBDC is that the central bank, which in a lot of cases is just an arm of the government, they can just shut you off because of political dissent, whereby as long as there is one step of separation, technically you're still protected by the law and the full extent that the law couldn't protect you. And laws are still variable too and malleable, as we see in Canada, right? Like when we had the freedom convoy and the protests, the government just said, okay, everyone protesting the COVID vaccine is a terrorist now, and yeah, we can freeze your account. But at least they had to do that and take that step, and ultimately that cost them reputationally and credibility in terms of credibility. But they had to take that step, and they had to force the banks, not the central bank, because central bank would just do it anyways. They don't need to do anything, right? They just pick up the phone and say, "Hey, cut off Eric," and then you're gone. But they have to take some step, enforce the Emergencies Act, the martial law, and then contact your bank and then deplatform you. So at least there's still that separation. And in this centralized world, I mean, that's that's probably the best protection you're going to get. You're never going to get a bulletproof bank account, right? It's still centralized, and that's why we have Bitcoin. But it is not definitionally a CBDC. The other thing I think people miss is that there is market demand for a stablecoin, and that market demand will be met. And the question is, who meets that demand? And I think we're very fortunate as Bitcoiners that you have a Bitcoiner, Paulo Arduino, that is, the CEO of Tether, and he is a Bitcoiner through and through. And Tether is accumulating Bitcoin, massive amounts of Bitcoin. They're investing in the Bitcoin ecosystem. They're bringing USDT to Lightning and to RGB potentially too. So they're doing a lot of interesting things for Bitcoin, and they are very much like advocating for Bitcoin. And the alternative would be somebody like Circle, that is the dominant stablecoin provider. And Jeremy doesn't like Bitcoin. He's said in the past, no one will use Bitcoin in 5 years. Like he said that 10 years ago or something like that. But it'd be like, I mean, Circle is basically Coinbase, right? So it's like Coinbase and Brian Armstrong with the dominant stablecoin, using that to promote Ethereum in some ways. But you can say you don't like it, but it will exist. There is market demand. So the question is, who is meeting that demand? And we're fortunate that Tether won out that race, and they're the dominant player now.
Idealistically, I would love to see us get onto a Bitcoin standard and for the dollar to go away as quickly as possible, but that's not realistic. I like to think about it through the sense of, or the lens of like, you can't just flip off a light switch and turn the dollar off and turn a Bitcoin standard on. It would be absolute mayhem. So things like Tether and stablecoins, I see them in some ways providing like a smooth transition, especially if people can download a wallet like the one you've developed, use stablecoins, and they're one click away from saving some of that into Bitcoin. So I think that that's a really good thing.
Yeah.
And
I mean,
go ahead.
there's discussion about will it be a quick transition off the dollar or a slow transition. I think it's actually going to be a quick transition because fiat currencies always die in a spectacular manner. It's just a question of when. And you also have to factor in that the US dollar is in a very unique position because it is largely digitized outside of stablecoins. Like it is a digital thing. It's reached market penetration that no other prior reserve currency has reached, right? Like it's sort of married itself with technology and ingrained itself in economies around the world. So it might actually take a few years, maybe 5 years, maybe 10, I don't know, but it will end, but it's taking longer than normally it would have. That a non-digital fiat currency would not have this lifespan.
Is that because we can essentially offshore some of the debasement required to keep the dollar monetary system solvent?
Yeah, well, if you look at history, like all the reserve currencies in the past were relatively centralized because they weren't digital. But with the dollar being mostly digital, right, you've kind of permeated every other country's financial system in some way with it. And in some way, every single other fiat currency is now linked to the dollar, right? Everything is a derivative of the dollar. If you look at the Singapore dollar, right, it's linked to the US dollar. The Hong Kong dollar is also linked in some ways to the dollar itself, too. And then you have other countries that just use the dollar outright. So it's reached really high levels of permeation that we haven't seen in history before. So that's why I think it's managed to hang on this long, even with the astronomical amounts of money printing. But in the words of Lynn Alden, nothing stops this train. So it's just going to keep inflating. And it's just a question of when it hyperinflates.
I'm curious, actually. I wasn't around during the block size wars, so I got in the end of 2017, maybe towards the end of all of that. Can you tell me about how that went down and what was your involvement in the block size wars for somebody who
Yeah,
wasn't
so
there?
so I was the COO at BTC China back then, or BTCC. It's a exchange and mining pool back in the day, one of the biggest. And because we were a large part of the mining hash rate, I think at our peak we were something like 18% of the network. The core devs, Gavin Andreessen and Mike Hearn came to us and said, it's time to upgrade to Bitcoin XT. And that was kind of my first foray into Bitcoin development drama. But they had kind of split off from the rest of the Bitcoin core developers, and they were pushing their own fork. And they were presenting it as if it was an upgrade and this is the next thing you have to change to. And that's kind of what pushed me down the rabbit hole to figure out exactly what was going on and what it meant and how everything worked. So that kind of escalated, I guess, when more and more actors piled on, including Brian Armstrong, on the big block side. They were trying to change the protocol and co-opt it to have bigger blocks. And I think it was the beginning of a slippery slope if you could petition and change the Bitcoin protocol for your own goals and to your own ends, especially for corporations to do so. So I think it was an important thing. And the opposition was this small block camp, which were saying you can't just change consensus rules. You can tighten them, but you can't loosen them. And that if you change something like block size, it opens the door to changing the 21 million supply limit. And of course, the small blockers won because we were right, and also because Bitcoin is incredibly hard to change. So you had effectively every big company in the space pushing for this change. And at that time, maybe Bitcoiners today don't really appreciate it, but it was like everybody trying to force a change on Bitcoin. All the big companies, Coinbase, almost every exchange, almost every mining pool and mining company. So to put it into context of today, it'd be like Coinbase with Marathon, with BlackRock, and everybody else saying, we're going to increase the Bitcoin limit to, 42 million now. And saying you have no say in the matter because you're just a pleb with a Bitcoin node.
I was curious as you were saying that, like, what would be the incentive for them to increase the block size? How would they be able to effectively, like, if they did double the supply of Bitcoin, would they be able to do so in a way where they're the recipients of the new coins and dilute other people? Like, what's the incentive to try to co-opt it, I suppose? Like, I still don't understand how that could work.
Well, it depends on how you view all the players back then, and we'll never know their true motivations. But as I said, it's a slippery slope. It's an innocuous change saying, okay, we need to scale Bitcoin. Fees are high, and we don't want fees to be high. We don't want people to pay 25 cents or a dollar per Bitcoin transaction. So what do we need to do? We need to make the blocks bigger so we can have cheaper transactions. It's like Ethereum and raising the gas limits and all that. I'm not that familiar with all the inner workings of Ethereum. I don't want to be, but it's similar to that. But that opens the door for more changes, more consensus level changes to the code, like increasing the supply. And I don't know if they wouldn't have direct access. They would still need to mine it. But given that a lot of them are dominant, especially like the mining side, you had Bitmain with a lot of their sub pools, their pool and sub pools, they would directly benefit if that change were to happen because they would get more coins. But I mean, at that point, Bitcoin becomes like an altcoin. It's just malleable, changeable at will, and unreliable, not immutable anymore. So I think another motivation could have been that Bitcoin is stagnating because back then you had all these alts and they have features. Adam likes to call them feature coins. Adam Back likes to call them feature coins, but they have some interesting feature. Like Ethereum is like programmable. That's their marketing speak. I mean, technically anything is programmable, but not everything is immutable and permissionless and decentralized. So I think there was a push to make Bitcoin more relevant in comparison to things like altcoins and Ethereum. And if you go back and look at it, after Brian Armstrong lost the war and he was kind of, mitigated, he went hardcore into Ethereum because that was what he wanted. He wanted something he could change all the time and be in control of and dictate a roadmap to and have this, it's high tech story backing him.